Markets tumbled. The losses came after sharp declines on Wall Street as rising rates continue to exert downward pressure on technology stocks. By making future profits less attractive, the declines were deepened by a plunge in Netflix shares after the company's fourth quarter earnings report showed a slowdown in subscriber growth. Meanwhile, oil prices slipped from their 2014 highs earlier in the week, falling about 2%. Japan's Nikkei paired earlier losses, falling about probably 0.9%. Mainland Chinese stocks also declined, and Hong Kong's Hang Seng Index slipping 0.1% as of the final hour of trade. Alibaba was down 3.7%, and European markets fell sharply, tracking a global pullback for risk assets. To talk to us about how the week panned out, especially from a market's point of view, we are joined by Warwick, who is the head at Galileo Securities. Warwick, thank you so much for your time. I mean, given everything that is happening globally right now, also what was happening in Asian markets, how's our local markets doing?
Well, I would say we've been having a relatively good week. I mean, yes, it's been a weak last few days on the US markets, but in terms of the JSE, well, we've seen commodities being strong, and so the JSE was broadly firmer. That's despite the rand dollar forex rate looking a bit stronger.
So we had trading updates from the clothing retailers, the likes of Mr. Price, Truworths and Fushini. Which one of those piqued your interest and at least make you look forward to reading the full numbers in perspective?
Well, I must say that as a group, all looked very good to me. I think what they're showing is a trend coming through there, and that trend is basically the big bounce. So, of course, in the prior periods that we're reporting, they were stuck in the depths of COVID lockdown in 2020 and so on. And, of course, what is coming out now is 2021 numbers that have recovered significantly from those prior eras. And obviously, what we're looking at here is a kind of return to some kind of normality after the whole COVID debacle, and that, of course, is very encouraging to me.
What was interesting yesterday was looking at Netflix share price after they released their fourth quarter estimates and guidance with regards to their subscriber numbers. Was the market reaction for this one justified? What were the takeaways for you when you look at Netflix?
Okay, so I think I'll speak in quite general terms, because what we're seeing here in a lot of places on the markets, particularly in the US, is a reversal of all stocks that gained by performing well during the depths of COVID, and that's basically on the idea that whatever allowed them to perform or succeed during COVID would disappear now that we're seeing some kind of normalization, and this happened to both your infotech and your biotech type stocks. Now, in the case of infotech, this might have some validity in that the whole sort of captive at home population, of course, is now much reduced, in that people can run around outside and go to work and restaurants and so on. Although, of course, they had the benefit that the products were adopted significantly, but also competition has kicked in. So the likes of Netflix have competition from Amazon Prime and other providers of these services. Of course, in the case of biotech, the success of a fast vaccine rollout and a wider range of therapies that are possible now offers a lot of scope for them to tackle a lot of other diseases. And I think for them, there's going to actually be a lot more growth in the pipeline.
So news came out earlier, and this is from the Asian side, that China has vowed to curb the influence of the technology companies and root out corruption that's tied to disorderly expansion of capital, as they've described it. And some are saying that this is another sign of expanded regulatory crackdowns on various sectors. How are you looking at China for 2022, let's say for the first half of the year?
I think we need to look at the Chinese government utterances in quite a broad context. And the first is that tech companies once cowed and kicked into line, must stay cowed. And I think, secondly, we looked at Chinese economic policy. It's very accommodative right now. And I think there's obviously concerns that Omicron will actually constrain the Chinese economy. Because remember, of course, that the Chinese were successful in keeping COVID constrained, but obviously the transmissibility of Omicron is a game changer for them. And that has got political implications in China. So basically, the party likes to remind everyone who's in charge, and I think this is part of that broad sort of approach.
So we had news that U.S. inflation reaching 7%, and you and I can speak at length about the tricky position the Fed finds itself in right now. But what does the effect of persistent higher inflation mean for stocks and bonds?
Okay, so persistent is obviously a very important word here. It's one thing for last month's inflation data to be 7%, and it's quite another thing if then in 12 months' time inflation is still at 7%. So obviously, if it's persistent, i.e. that inflation continues to remain high, then that can be very damaging indeed for stock and bond prices. Bonds, of course, because they pay a coupon, and at the moment the coupon on a 10-year US bond is about 1.8%, which meant that if inflation stays put at 7%, those bonds are paying a pitiful amount, and therefore the price must fall in order to pay someone a real appropriate yield. Stocks are more complicated, but again, because stocks are priced off what your available yields are, they too will take a fall if inflation sticks around and basically does not remain transitory.
Warwick, thank you so much for your time. That is Warwick Lucas, who's the head of Galileo Securities. We're going to take a quick break. When we come back, we'll have SME on point and, of course, your money.
The Northern Cape, its people, as diverse as its landscape. We bring you these stories.
We amplify the voices of all cultures, and it's your stories we don't take for granted.
We traverse South Africa's largest province regularly, bring you news of its political landscape, its adverse weather, and how the largely poor and mostly rural people survive.
Now, we not only bring you news of their latest discoveries and how and why they work, but we also put it in a language so that you can understand why it matters to you.
We bring you stories of substance and detail.
The voices of the people are what matter to us. Their plight is our concern.
We sit in meetings dissecting stories. You can trust us as your source of news.
I'm Tapelo Khobuswane, and I bring you material of high quality.
Camera work is our pride in driving great video content, and it must be flawless.
Trust us to bring you information